Alright everyone, Cowboy Trades here, welcome back to the channel for a super quick update on Bitcoin. So I just wanted to talk about these two particular CME gaps that we've currently got playing out on the Bitcoin CME futures. 29k and 20k. Which one is going to fill first? Let's talk about it. So we've been looking at this chart for quite some time now. We've been talking about above 33,000, how we've got a CME gap here. We've got a CME gap at 24,600, CME gap at 18,420, and we've filled these three major ones. And we've of course been talking about on the channel how, in my opinion, we're definitely going to come down and fill CME gap 1 around about 11,100. Now, we'll see in the future if we do break beneath 10,000 if this is on the table. But I would like to highlight, 11,100, this CME gap down here is very important, basically at the start of the bull run in 2020. It'd be very, very nice to come back and retest these range lows properly before pushing up into a new bull market cycle. But right now, in the immediate short term, we've obviously been pumping for the past couple of weeks, the past 2 weeks really. And now is the question, are we going to have enough momentum to push up to 29,000 to fill this CME gap? Or are we going to break down and fill 19,900 first? Now, it's of course always possible that we fill both of these. We have a retest and push back up to the upside. However, if we do come over to the higher time frames, well, basically both of these charts are on the weekly. But if we come over to a clean chart over here, I would like to, talk about the fact that it's going to be very, very hard to push up to 29,200 and fill this CME gap all the way up here, mainly because we've got a lot of nasty trend lines that are currently, still absolutely in play for Bitcoin at this moment in time. And something very interesting also pops up if we do pull out the stochastic RSI, which we will do in just 1 second. You can still see in the macro time frame, if we're looking at the biggest swings, you can see the top, low, lower high, lower low, lower high, lower low, and this is still a lower high. Now, of course, if we're looking at this data point here, around about 21,500, we've actually pushed up, about $100, $200 above this one. So obviously take this one with a grain of salt. If we line this up here, boom, you can see that we very, very momentarily pushed above 21,500. And, for the past couple of days, we have been stuck underneath this. Now, it still looks like momentum is definitely in the favor of the bulls in the lower time frames. But of course, in the higher time frames, you've still got this nasty downtrending line to contend with, which will be clocking in this week at 23,000. Now, if we come over into next week, this is going to break down lower into 22,600. Coming into the end of January, this trend line would be coming into fruition at 22,200. So keep an eye on this trend line. We also do have another trend line with a less aggressive line of attack, which is also on the tables potentially for Bitcoin. You can see if we connect, this touch point, this one, this massive, massive capitulation here, bounce back up, retested it. You can see if we do start pushing up in the next couple of weeks, this could push us up to potentially even as high as 24,800, maybe 25,000 if we do have a little bit of a liquidity grab. But there are a lot of areas of resistance loading in for Bitcoin. And I find it somewhat hard to believe that we're going to manage to push all the way back up to these range lows at 29,300, which will of course fill this CME gap up here at 29,200. Now, I'm not saying we're never going to push up to 29,200 ever again. I personally think, in the next 10 years or so, Bitcoin's going to be trading at hundreds of thousands of dollars. However, in this bear market, I don't think it's likely we push up to 29,000 before breaking back down to the downside. So let's keep an eye on this. I'll keep you up to date with how we interact with these two trend lines that we just talked about. Obviously, remember, range lows kind of start clocking in around about 27,900 and start topping out round about 29,300, unless you're being generous with the candle body closes round about 31,700, which seems even further away and less likely in my opinion. Now, let's finish up on this chart. If we pull up the stochastic, you see something very interesting play out. Now, you can see over at the top right here, you peaked in the stochastic, you broke down to the downside and made new lows. You then pushed back up, topped out on the stochastic RSI at 87, and as you can see over here, this is where you topped out on this trend line. You broke back down into new lows, stochastic bottomed and started pushing back up to the upside. You can then see right here you had another macro lower high. We then continued to break down to the downside, and we actually had a bounce on the stock, pushing up to about 90.45, which is basically where we're getting stuck at this moment in time. We broke back down, and right now, once again, the stochastic has taken a monumental run to the upside. The blue moving average is currently sitting at 85, which is just a little bit lower than it previously topped out around about the 7th of November. Now, we've pushed up very, very quickly And once again, I would like to highlight, if we're looking at the macro swings, the downtrend is absolutely still in effect. You can see from the top here, you've got lower highs, lower lows, lower highs, lower lows, and lower highs. But of course, if you are incorporating this data point as well, which it would make sense because you did actually push up once again over on the stochastic RSI, there's two arguments for this. Once again, you can say, hey, yes, we pushed above this trend line here by about $100 or so, but it does look like this is a very, very crucial area of resistance. So keep your eyes on 21,600. If we manage to start pushing above this, you've got resistance coming in at 23k, you've got resistance coming in at 24,700, you've got resistance coming in at 28,000 and 29,300. Once again, I don't think it's likely that we're going to push up to these trend lines, but it is possible that we do come up to these trend lines before breaking back down to the downside, because of course the stochastic RSI still has a little bit further to push up to the upside. However, other indicators like the MFI are extremely overextended right now. And while we have broken to the upside of this, this is not really a bullish sign in my opinion. This just means liquidity conditions are becoming more and more overextended. So much money has run into this market so quickly. And the fact that the MFI is pushing up to, 61 right now while we're in a bear market is not a good sign in my opinion. So once again, let me know what you think down below. Do you think we're going to come down to this trend line or do you think we're going to come down to this CME gap at 19,900 and fill this first, or do you think it's likely we push up to 29,300? As always, I'll keep you up to date. All I've got for this video, as always, if you do enjoy the content, let me know down below by leaving a like and a comment. Share the videos with your friends, and if you do want more of my charts, memes, technicals, be sure to follow me over on Twitter at 618_cowboy. So all I've got for you today, as always, it's been your boy Cowboy Trades. I'm out. Peace.